When you sell a UK residential property, you have exactly 60 days from the completion date to report the disposal and pay your capital gains tax, or CGT. On day 61, that window locks into place. Submitting a flawed declaration during this tight window leads to immediate problems. A simple data mismatch will trigger an error 5017, meaning your return is completely rejected by Revenue and Customs, or HMRC. Following a rejection, you will likely receive a compliance nudge letter demanding immediate correction. Failing to correct these submissions carries steep financial penalties. Missing the 60-day deadline results in an instant £100 fine. From there, daily compounding interest begins to accrue on your unpaid tax, and over time, penalties can escalate to 100% of the total tax you owe. We are going to walk through the exact diagnostic process to fix these rejections. Step by step, we will uncover the specific error, recalculate your actual tax liability, and select the precise amendment pathway required to get your return accepted. Minor administrative mistakes are the primary cause of these massive financial headaches. By understanding the strict logic of HMRC's filing system, you can clear the errors and take control of your compliance. Step 1 is reconciling your digital identity. Your personal tax account, the PTA, which holds your general taxpayer data, must perfectly match the specific details you enter into the dedicated CGT account. If these two databases do not mirror each other exactly, you experience an administrative identity failure. This stops the process immediately. The system will block your valid tax calculations from ever reaching the processing stage. HMRC systems scan for minute discrepancies. Even a missing middle initial on the CGT side triggers a full rejection. Address data is treated with equal strictness. A mismatched postcode between profiles is a fatal error, trapping you in a loop of system rejections. To resolve this, you must update your main PTA address first. Once updated, you must wait a full 24 hours for HMRC's databases to synchronize before you can successfully amend your CGT account. A perfect digital handshake is a mandatory requirement. Until the identity profiles match, the portal acts as a brick wall, blocking your submission before a single pound of tax is calculated. Step 2 is manually verifying your capital gains calculation. HMRC's own software has known glitches regarding mid-year rate changes, so you must verify the math yourself to ensure accuracy. For the 2025-26 tax year, deduct the £3,000 annual exempt amount from your total property gain. You must manually verify this taxable remainder is taxed at the correct residential rates, 18% for basic or 24% for higher rate taxpayers, avoiding older system defaults. When calculating your initial gain, you must separate improvements from repairs. Improvements, like adding an extension, are deductible for capital gains tax. Repairs, like fixing a broken pipe, are strictly for income tax and are heavily audited by HMRC. Bypassing automated software during a rate transition period is a necessity. Calculating your figures manually provides an effective shield against underpayment penalties. Step 3 is selecting the appropriate amendment vehicle. The path you take to submit your corrected data depends entirely on your current annual filing status. If you haven't filed your annual self-assessment, proceed down the digital route via your CGT account. However, a mandatory 72-hour system cooldown applies after original submissions. Conversely, corporate trustees or those failing identity verification must use the paper route for amendments. Choosing the wrong submission pathway traps your return in processing delays. Routing your amendment correctly is just as important as calculating the right tax amount. Step 4 covers the protocol if your annual self-assessment, the SA, has already been filed. Once an SA is filed, it supersedes all previous reports for that tax year. You must never go back into the online portal to attempt to alter your original 60-day digital return. If you overestimated your income on the initial 60-day return, you likely overpaid your capital gains tax. Filing your SA with the correct annual figures will trigger an automated offset or a refund for the excess amount. Look at this section of the SA 108 capital gains summary pages. To correct HMRC's software calculation glitches, you are required to manually enter your adjustment figure directly into Box 51. The self-assessment is the definitive document for your tax year. Once submitted, all final corrections and compliance checks are managed entirely through this return. By completing these steps, you align your digital identity, override software glitches using manual 2026 rates, and select the correct amendment pathway for your filing status. This video is for educational purposes only and does not constitute financial or legal advice. Tax laws are highly specific and require professional consultation. If you are overwhelmed by compliance nudge letters or need assistance calculating a Box 51 adjustment, my tax accountant, MTA, is ready to step in as your expert partner. For professional assistance, contact our team by calling 020-857-08531 or send an email to info@mytaxaccountant.co.uk. The 60-day reporting regime has strict deadlines and rigid digital requirements. By mastering these procedural steps, you can confidently correct your declarations and maintain your compliance.